Good morning, everyone. This is Brad Matheny. I wanted to show off a little bit of what I've been building for you. So, this is what I'm calling my day trading pressure system in PineScript. Getting quite familiar with PineScript. Now, it consists basically of two things right now. It consists of the Fibonacci Price Theory mapping system. So, I'm going to come in here and I'll go to the editing system and I will turn off the standard. Hold on, ultimate, unique. So what we'll do is we'll turn off the unique, and we'll just leave the ultimate. So understand that ultimate triggers are the massive rotational triggers that occur in the market. Okay. They are typically, 45-day gaps or longer between these big price swings. And what these are designed to do is to teach you using Fibonacci price theory where the upper 382 level is and where the lower 382 level is. So notice that this is a 1 minute chart. I'll go down here to a 3 minute or a 5 minute. Notice how we were in bullish trending all the way back here on the 16th, very solidly bullish bias. We changed direction immediately on the open on the 17th and stayed in bullish or bearish trending because we're below this lower 382 level. We stayed in bearish trending all morning long, finally switching into bullish trending here at the end of the day, barely. Then we moved into bullish trending here early on the 18th, broke all the way down into bearish trending. And what this is designed to do is to keep you guys aware of pressure in the market. Okay. It's designed to teach you that we have an A and a B. We have essentially a bullish side up here. Oops. Trading panel, no. Come back here. We have a bullish side here, and we have a bearish side here. So, I don't want you guys to run into any questions here in the sense that, Brad, you said it was going to go up. Yeah, I did believe that yesterday, the 19th, was going to see a reversion back to the upside. But I want to keep you aware of the cycle patterns. And for example, the 19th, we rolled up, we got into moderate bullish. I would call this not even bullish. This is just testing the bearish level. And then it rejected right at the bearish level, which is beautiful, and came right back down. Now, inside the setups, you can control these lengths. So, for example, I have this set to 45, but a good way for you to consider this as a broader term would maybe to set this to say 115 or 120. And by doing so, what you're going to see here is you're still going to get these rotational triggers. Okay. You're still going to get them that are occasionally, and maybe I have to go a little longer. So let's try 145 because I'm down on a 5 minute chart. What I want to see on this triggering mechanism is I want to see broad, possibly 2-day types of trends. The highest trends that can occur are typically broader market cycles. Now, if I were on a 15 minute, understand that may only be about 65, 75 bars. But down on a 3 minute, it's going to be longer. So understand this is the true ultimate high. And as we come down to see these new ultimate lows set up, you'll see that the rotation of the trending system, the Fibonacci trending system, changes. So now we have bullish here, now we have bearish here, and this is, in my opinion, a better representation of the ultimate signals. Okay, here we go, bullish coming down into this area. It rotates off this new bullish trigger, setting up this bearish trigger down into this area. but you know, this is late. Okay, I get it. This is late. Let's focus over here on this so I can show you how this works. And look at how beautifully it caught these trends. Okay, so now we're only looking at the ultimate triggers, right? Let's go back and turn on the unique triggers. Okay, so we're going to turn on the unique bull and bear. So now we have these unique triggers. They're separate than the ultimates. The ultimates stay in play. The uniques roll here as we move up through price. So now uniques are set up as a 20 and 2. So now you have the ability to change these lengths. Okay, you have the ability to set this to say 35. And the whole point behind this is that I want you to be able to control the structure of how you understand price. So you can see here, this was a beautiful, kept you in a long uptrend all the way through the second, third, fourth, fifth, sixth, seventh, eighth, ninth, into the eighth, rolled into this sideways congestion. A bit of downward consolidation below the lower channel here. Again, these are bullish, bearish channels, and then rolled back up into bullish, rolled down a little into bearish, rolled back up into bullish, stayed into bullish trending through here, consolidated back here, and then went straight up into bullish here. Now, as a day trader, this is going to help you control direction. Okay, this is going to give you a very solid directional structure that you are going to be able to trade with. For example, here, got into bearish trending right in this area, very, very early on the 11th. Stayed into intermediate bearish trending all the way down until we set up this ultimate low into downward bearish trending, major downward bearish trending, then went into intermediate upward trending here, never looked back. Look at how cleanly this rolled from a standpoint like this. This is our intermediate bearish trending setup right here. Remember, these unique lows and highs are, let's call them short to intermediate term. There's another level that's ultimate short term. And then you can see here, I will come into here. And let's come over here where it finally went to bullish, was right there. And give you an idea that this is what I'm hoping you guys will be able to use, meaning my subscribers, my followers will be able to use to be able to catch these trends. So now remember here we have, let me see where we're at here. This big, beautiful arc comes all the way up until here. That's where we finally get another trigger, and this big, beautiful arc comes all the way down to here. That is our bearish arc. And so you can see how cleanly these moves are defined, right? Hopefully you are seeing these. Now we come back over here. We get a breakdown here, which is very quick. Obviously, it came down here to this level at the end of the day, assuming you're not holding anything into the end of the day. Then the following day opened in this area. Normally, like I told you, I wait the first, 30 plus minutes to see what's going on. You can see that we got into a solid bullish trend up until here. We then rolled into a bearish trend from here all the way through the end of trading here. We had a little rotation of bulls here, it looks like. But it looks like it was fairly strongly bearish. And then we rolled into the next day, which was bullish from the open all the way until here. Bearish from this point all the way until here. This was a little sideways congestion. Forgot to change this color. And then we caught a little bullish move right here up till the end of the day. And then we stayed bearish all the way through. So you can see here, this entire trend down to here, right there, was bearish, designed to keep you aware of downward trending. And again, we went bearish right here. And again, we went bullish right here. So let me try to catch this bull. And lastly, as we roll into the end of trading yesterday, you can see we were bullish there from here to basically here. It failed. And then from here to here, bearish. And then from here to here, bullish. And I'll draw one more, which is the end of the day, pretty much all the way down to here. So now you tell me, how does this look? Does this look like it would help you? Now remember, this is just the intermediate trend. Overall, the longer term trend has been bearish from here all the way down to here, okay? The overall trend has been bearish. And the overall trend here from this level all the way up to here, basically to here, which is actually here, has been bullish. And of course, we come back over here. Was that the base level that we caught? Yeah, I guess that was the bottom that we caught. We can come all the way back here. And remember, this entire base level all the way up to here, all the way up to really over here has been bullish. And then we moved into a broad bearish stroke. So remember, what we're looking at here, guys, is a fairly strong indicator of market trend. This is on a 5-minute basis, okay? This is on a 5-minute basis, and it works on anything. The concept here is to keep you aware of major trend as we continue to ride through these market trends. Now, as a day trader, you can go all the way down to a 1-minute or 2-minute or whatever you want to do. But as I build this out, I want to try to keep you aware of trending. Now, I've been working on another feature, which I'll show you by coming back over here. And I'm not done with this yet. It's not ready for the public, but you come back over here, and I've been working on this, what I call pressure system down here. And right now I'm just having to draw these blocks. Later, it may end up being an indicator, but understand that when you get 2 or more blue or green in a trend, then you want to try to look for general bullish trending if we're above the 382 bullish trigger and the 382 unique trigger. So now when we get into these 2 pinks and a red, you're really looking for consolidation, maybe a pullback. What you're really looking for is a trend change that sets up a broader trend change that shows us a big solid pullback. And those are going to come typically when you get 2 solid reds, but they're going to be consistent. So remember, as you're day trading through this, you're going to be trying to look for a trigger mechanism here that shows us up until this red area here, right in this area. That was our trigger, basically there to there. And it was above the trend. So you want to try to trade this as an uptrend, meaning that we're still seeing an uptrend. Then we get back into the 2 greens here, and we get another trigger right here, following this all the way up to the 2 pink or 2 red. There's your little day trade right there. Then we look for another uptrend. We move into an early uptrend here, 2 bars in. It rolls into weakness right here. What do? Well, we could theoretically, guys, look to get out of the trade, or we could, because we're still in this uptrend, we could wait this rotation out. Remember, these are just pinks to be able to carry it into this green area here until we start to get reds, which we start to get reds right over here, still a bit higher, and that's near the end of the day. So understand, this is designed to help you identify trends. Now, I'm likely going to expand on this. I've got ideas to strengthen this and maybe give you guys a better context of the overall direction. But I wanted to highlight what's going on right now with the research I'm doing. And remember, these triggers, the way I see it, and correct me if I'm wrong, but if you can follow the idea that you're in an uptrend and you want to try to pick trends efficiently, there's a very solid move. There's another very solid move right in here, technically all the way up into this pullback area right here. Those are some pretty good sized swings in the SPY. You're talking about a $2 swing in the SPY here. That's not a bad move on a 3-minute chart. Maybe 20 minutes, you're getting a nice little swing. And the purpose of all of this is to give you something that you can understand, that you can visually identify. And now I'm going to be working on these triggers to try to amplify the pressuring system. So, the way it works is when you start to see this weakness, when you start to get 2 pinks, like right here, then a red, you're getting a moderate little pullback in price, and it sets up an opportunity for you to load up on another long trade or to add in. And that's what I'm kind of working on as a secondary structure down here. Now, there is, lastly, the right here, the standard left and right. So if I come back here and I set the standard bull and bear 38, then you can see here, and these are based on, you can control these 7 bar. I've got them set to 7 bar. I can make them 9 bar, make them a little longer. But you can see now throughout these uptrends, what we're looking for with these Fibonacci structures is price to get below this lower bearish level as confirmation. When price gets down into that 38 area, like right here, price gets into that 380 or 382 level here, these are great little pullback entries. Okay, that's what this is showing us. So, when price gets into these areas from a standpoint like this and rejects, or we come into this area, roll above it, come back down to this area, but stay above those levels, you're getting very solid rejection. And now that's showing us that we can move higher. Obviously, you can come in here and you can adjust these levels down to what I teach you, 15 to 35 bars is what I teach you how to use these in structure. And you can see now that the intermediate levels have tightened up. So when you tighten up the left side lookup bars, say 20, that's looking for those price pivots. So now we're looking at these levels here. These are our levels right here, and we're moving through these congested periods, trying to find where price is structurally rejecting. So you can use the shorter period standout triggers as very tight, the intermediate term unique triggers as more of a balance between short term and intermediate term. And then you can use the longer term triggers here, which are the heavier set blue and red triggers for the long-term analysis. And I think this is going to be a very valuable tool for everyone. Yeah, I'm going to figure out why this did this here. It looks like this rotated into a tight channel off of this trigger and this trigger here. And that's probably because of this 20. So maybe set this to 35. Yeah, see, it's resolved the trigger now. So what you have, folks, is everything is price related. Everything, and that's what I'm trying to teach you how to understand. So when I talk to you guys about something and I label an A or B type of scenario, I want you to understand where we're at with this. So now just for the fun of it, look, let's come over here to an hourly. Okay. And here we go with hourly data. Come back over here. This was our analysis based on the 5-minute data. You can see here that we are still technically in a long trend. I have to adjust these. So I'll go into settings. I'll set these back to 45. I'll set these back to 20. And I will set these back to 7. And so now we're still in a longer term, actually bearish trend right now. We have gone into an ultimate hourly bearish trend. We are below this bearish level right now. We are below the bearish level here, and we're below the little standout levels bearish. So we had been long hourly all the way back since this area on July 3rd, rallying all the way up. And now we're in a bearish trending mode. So this gives you an idea of, long term, short term, intermediate term, and it's very easy to see, in my opinion. So I hope this is something that'll help. It'll take me probably another week, 5, 6, 7 days to play with this and get this the way I want before I release it to everybody. But the intent here is to help you. And ideally, the way I envision you running this is kind of like this. And here, this was supposed to be our 2-minute or 3-minute. So the idea here, folks, is you run it very short term here on a 2 or 3-minute, here on a 5-minute, here on a 10-minute, and here on a 30-minute. And you can see how things rotate quickly in and out of cycle trends and decide how you want to trade this. This 2-minute is going to be very quick compared to this 5-minute and this 10-minute. But look, the 10-minute has been solidly bearish since that big breakdown bar, and the 30-minute has been solidly bearish since the middle of the 17th. So, I mean, the whole idea here is that you can clearly see direction. And I want you to be able to clearly see direction for your trading so that you know what type of trades to take. If you're bearish on a 10-minute, bearish on a 5-minute, you do not start to build very big long trades here on the short term. You've got to ride this trend until it changes direction. Okay, guys, I'll update you more later. Talk to you. Bye.